we have seen increased investor and regulator scrutiny on fees versus performance over the past year. In the previous edition, we reported on the FCA fining closet trackers £34 million. GPIF, Japan's government pension fund and one of the largest pension funds in the world, has decided to take action as well. It is overhauling its fees for existing and new active managers by paying for alpha generation. Otherwise, active managers will be paid in line with passive managers on the same size.
It will be interesting to see if more institutional investors follow suit and incorporate a similar model. Sticking with pension funds, Mercer, a large pension fund consultancy firm, has proposed a more radical shift, stating that asset managers should pay investors for managing their portfolio. They propose that active managers keep any excess returns they make after paying investors a guaranteed return in addition to a fixed annual fee. In the case of underperformance, this would mean that the asset manager will have to pay the investor from its own money.
Well, investors will definitely be happy with being paid by their asset manager.
Well, I know I would. In a move aimed at appealing more towards investors, Fidelity Japanese Values Trust is set to introduce a variable fee model. This move is set to reduce headline management fees of the trust from 0.85% of gross assets to 0.7% of net assets over a year. The trust also aims to introduce a performance fee that will range between plus or minus 20%. Dariush, this is just one of the few examples of new fee models being introduced in recent months, if I'm correct?
Absolutely, Zoha. Fidelity you already mentioned, but Allianz Global Investors and Allianz Bernstein have both put plans in place to adopt new fee structures. Allianz Bernstein, for example, plans to launch a new performance-linked fee model in Europe. Following the launch of their flex fee products in the US, the fund house plans to launch products that will have a base expense ratio of 0.6% with a performance fee ranging between 0.1 to 1.1%. These funds closely mirror a passive style management fee, and they are aimed at challenging the rise of passive funds. Allianz Global Investors has taken a slightly different route, launching new funds in the US that charge little to no management fees if they don't outperform their benchmarks. However, if they do, then the fund house will earn a management fee of up to 120 basis points.
So we're seeing these new fee structures becoming more popular with asset managers around the globe. Apart from those you mentioned, Orbis Investment Management and Equitile have also come to market with performance-linked price models in recent years.
Exactly. As you said, we are seeing more interest and investors are searching for fund houses that deliver value for money. Let's turn to passive and see what happened in the last month.